Now we look into a smart trade from the community at gt247.com. Where are we going with this one, gentlemen?
Well, I wanted to go back to that Twitter opening yesterday, because one of the technical questions that arose is, so they do a partial placement at $26. Why did the Twitter market only open an hour and a half after the normal market in New York? And why did the shares open at $45.10 or whatever it was? So will you explain that to us, Ollie, in terms of the way these things work?
Yeah, well, I think what the case with yesterday, I think it was the New York listing, right?
New York Stock Exchange, exactly.
Obviously, what I read, and obviously all the time you were following the Twitter feed, and it was coming through quite aggressively, is that there weren't many people looking to offload stock, and to determine that price was quite difficult. So generally you go into, when the market closes, you go into an auction period, wherever the buyers and sellers meet at the most quantity can be matched, then that determines the closing price. Yeah. So I think there was some confusion there yesterday.
Why the discrepancy between the two prices?
Well, just to explain that again. So in Facebook's case, what they had was a lot of insiders that wanted to sell on the open. You know, people that had unrestricted stock and so on, a lot of the venture capital funds. With Twitter, they managed it very closely. Those people all agreed not to sell. The company actually raised money by placing shares at $26 a share, and that money goes to the company, not to any exiting shareholders. The first trades then were of people who either had them and weren't restricted, or just members of the public, or some of those lucky few that got them at 26. So it basically was an auction, as Ollie says, and it was managed on the floor with access to the computers as well, people submitting their bids and offers. And then it was like a controlled auction. That was then 12 million shares traded, and then it went electronic.
So there were no shenanigans here. It was all above board.
No,
otherwise we would have heard about it already.
Those that wanted to buy shares, I bought some shares myself. I bought about $30,000 worth, which is about 300,000 rands worth of Twitter shares, and we paid $46.73. Then they went to 50, and then they closed at 44 and some change. So we're slightly down on our purchase.
Are you happy
price.
with your purchase?
Absolutely. I think it's one of the best and most attractive investment opportunities available.
Thanks for letting me know. I mean, you could have, this is a partnership here.
It wasn't just me. We were buying for various of our clients, some of whom had sort of funded their accounts in New York additionally in order to participate. Others who were like selling some things before. I, in fact, was selling in part some of the holdings that I'd had in private equity listed funds that own Twitter. So I was doing like a switch, so to speak.
Again, thanks for telling me. But now I want to know what you're going to do with it. Are you holding this stock?
Absolutely. We're holding this one. Look, this is not in the Hot Stocks portfolio. This is a personal holding. But my intention is to hold it for the next 25 years. And then when I'm old and grey, I can just live off the dividends.
And also for your children's education.
No, well, unfortunately, they're at the age where they need to be educated now. So that has to be from a different...
Oh, sorry for you. That's going to have to be a different strategy. Ollie, do you think that this is a wise move, that Paul stays heavily, not heavily invested, but holding the Twitter stock for 25 years, the blue sky potential, gives enough for the blue sky potential to come to fruition?
Yeah, I mean, like I said to you earlier, I think it's a good stock to hold. It's just generally there's so much hype around something like this that there is massive amounts of volatility that comes through. I mean, Facebook is pretty similar.
Well, it's interesting you raised Facebook. So I bought Facebook on the day of the Facebook listing as well at $39.99. It was like I got a special at Pick and Pay. What happened after that is that they plummeted down to 18. Since then, though, they've rallied and they're currently sitting at around 50. So that was at first, everybody was telling me.
And that's the volatility that Oliver's
But again, don't feel
to.
sorry for me, because in addition to those two, I also own Yelp and TripAdvisor and Zillow and Zynga and Groupon and all of those social media stocks. Because
we would expect nothing less from you.
I like this theme. I mean, it's changing the world.
And the interesting thing was actually the Nasdaq was off quite substantially yesterday, about 2% odd.
Exactly. It wasn't a great day in the end for the market. So Twitter did pretty well, I think, under the circumstances.
We've got to watch out for that jobs data. Time now to check in on how the portfolio has been faring. So Paul, is this good or bad? We were at 162,000 yesterday.
And we were at 164 plus at the end of last week. So the bad news is we've gone down.
This is calamitous. We're below 160,000. Oh my goodness me.
159,794. So
we should have cancelled the show today.
The soft markets that we were seeing, that Ollie was referring to in America yesterday, kind of flowed through, and we saw that sort of overnight decline. So that's just what it is. It's 159,794, and that's just an aggregate. Also, what was quite significant yesterday was Truworths' trading update. Not so hot.
Those retail stocks took a hammering
Exactly, and
yesterday.
we've got a big exposure to Woolworths in the portfolio and a bunch of other things, so that's where we were giving it back.
Paul, this is rather unsettling for me. I kind of had that psychological 160,000 for me was very important. Talk me through it. I need a little bit of
Well,
a little bit
I tell
of
you what,
coaching here.
let's go to the positions and let's see
All
the
right.
underlying things. So let's get our team to put up either the losers or the winners.
All right, let's
I don't mind which one it is. There's the losers. Okay.
Yes, let's address the bad news first.
So these are ranked from the worst position at the bottom. So the position we're losing the most on at the bottom, and that I think is Discovery. And then that British American tobacco position, that's been rising and we're short. So we're also losing a bit of ground there. So I don't know, Ollie, is there anything on this list that sort of jumps out at you that if you owned it, you would close it out or exit it immediately?
Geez, that BTI short would probably be the one that I'd be a bit nervous
You
for.
see, you came under a lot of hammering for that BTI.
But I've heard that smoking is bad for you.
Yes, but Paul, that's just a personal preference, and really you shouldn't apply your personal preferences to your trades. It's working terribly.
No.
for you.
Seriously, I mean, there has been a quite sad deceleration of sales of cigarettes across the world, even in countries where smoking remains pretty popular. So what I'm waiting for there is a long-term recognition by the market that this is not a good share to
Not
invest
many
in.
people out there agree with you at this point, so you may be waiting a long time.
And I think that move that we've seen, I think 10% in the last couple of days, is purely just on the rand weakness.
Oh, yes, that's probably true. But to be fair, you're right. We did have a profit on this position for a while, and now we've given it up. So that, in a sense, is bad trading. You know, you get an easy gain on a short position, you should really take it.
I would have just gone with the market is against you rather than highlighting the bad trading. But
other
that's
thing
again
is-
your preference.
The other thing has got such a big weighting in the top 40, it could act as a kind of a hedge on any day when the market does come lower. So
But look, across the board here on our shorts, we had a little bit of a giving back. I mean, the two at the top there are the positions we've just entered into, which is Murray & Robertson, Billiton. AdCorp is also new this week, so there's nothing really stands out for me. Ellie's is not doing well. Ellie's is a little micro-cap stock that we thought might have a bounce, but I don't know, it just feels to me.
Whose pick was this? Because somebody was very enthusiastic about
wasn't
Ellie's.
it Tsepo Modiba's? Or I
It
think
is
so.
Tsepo Modiba.
I think the idea there was that, you know, what's going on in that space with the electrical suppliers. We talked about Roynet and about, you know, ARB Holdings, and then we picked up Ellie's. And Ellie's has just had a rather unfortunate event with some of their subsidiary directors selling.
You've got to watch these value managers.
Excellent. But let's go on to the winners because
All right,
we
let's
don't
have a
want to
happier.
focus on our
Exactly.
mistakes too much.
I'm glad you decided to do the winners after the losers.
So these are the winners up at the top there. So you can see the biggest and most profitable position for us is Steinhoff.
Go
And after-
Marcus Jooste.
Yep, and it was at 40 Rand a share and it's now back at 39.40, so we're loving that. And generally my sense is still that Europe positive retail sales are what's going to drive that.
Sasol's doing well for you.
Remains a positive on the front foot. That's why we didn't want to add to them when we did the trade during the week, because you can see it's a pretty big holding there already.
Naspers.
Naspers is big, so Naspers, the theory was it's going to do well if Twitter does well, so let's see if that little theory comes to pass. It's got to do a little bit more heavy lifting. And then in the middle there, do you see that very big position? The current value, 117,000?
DAX.
That's our German DAX thing. So the Germans are still working for us. We've made 1,500 rands from them. But
Are you going to give them more time, the Germans?
well, remember the German theory was that the election that they had a few weeks ago was not decisive, so they have to form a coalition government between Angela Merkel's CDU and the SPD, which is the sort of lefties. So that's apparently going reasonably well. My theory is if they pull that off and they get the coalition, then the mood with regard to Europe and with regard to Germany in particular will be strong.
Ollie, how do you feel about the DAX position?
yeah, I mean, the political risk in Germany is obviously, you know, quite is going to have a big influence. But I think, you know, broader market conditions are going to come to play on something like that. So
That's fair enough. So in other words, the position's all very well to talk about politics, but really it's big stocks like Siemens and Bayer and BASF, and how they do is probably more to do with just global markets. So your theory about the non-farm payrolls in America will probably drive this index as much as anything else today.
Exactly, and I hope that moves in the right direction, because I don't know if I can take any more downside. I'll get used to 159,000. I feel a little more relaxed now. You've taken me through the losers and the winners.
Yeah.
I think we're all right, but watch out for that data. Ali, are you concerned about the non-farm payroll number? It's obviously going to drive the market. My theory is, and Paul is now relenting to the theory, is that if we get a good jobs data number, then the market will sell off because the possibility of tapering becomes all the more imminent, and vice versa. So it's
Just
terrible to
whatever
say
you do,
this.
do not agree with her. Just do not agree with her. That's the only thing I want you to say right now.
Okay, well, I've agreed enough with Paul today. So
You're agreeing with me? Are you agreeing with me?
no, well, I mean, I think, it all depends on the day, really. The non-farm payrolls, I think it's how bad the number comes out. So I'm partially
Well,
agreeing.
if I say we
Bronwyn's
get a
theory
bad
is
number,
the market's
yes.
going to be very good. The number's going to be
If the
good.
bad number comes out, then the market will rally because money will continue flowing from everywhere.
I think that's a very short term, and it might affect the markets maybe for a week or two. But obviously with FOMC last week, there was clear indication that quantitative easing could carry on for